Well, good evening, all. Ira Epstein with your SPDR ETF stock market wrap-up. And this wrap-up is for the evening of February 7th, 2023, just after 5:50 in the evening. Now, remember, we have President Biden speaking tonight's State of the Union. He'll be telling you about all his accomplishments, of course, and chastising possibly the Republicans about getting the debt ceiling removed or lifted, whatever you want to say. Today was the second coming of the Fed chair. Remember, we just had him last Wednesday, and today, not even a week later, he was back on David Rubenstein, and it was a great show. Rubenstein is such a character. He comes out, and the first question is, had you known that there was going to be 519,000 new jobs, would you have gone to a half a point increase rather than a quarter? And of course, you didn't get a straight answer out of the Fed. Then I loved it afterwards. Do you guys get all this information before you set up the policy? And, these are the inner workings of the Fed. And the Fed chair gets a lot of the different pieces that the members don't. And that was interesting to learn in itself. Mr. Powell said that they are going to stay the course, that he is committed to the 2% target rate. Rubenstein asked, why? What's wrong with 3%? And he went to the 2%, answered that that's what the other central bankers also think is the natural number. Maybe that's the right word that you use. I don't know. I don't think he pushed back enough, though, on David Rubenstein. There was a chance here to really be a hawk. And what he said, again, was hawkish. It was the same replay, but it didn't feel it to the market. So there's two battles that are going on right now, and you have to appreciate what they are. The first battle is the concept you don't fight the Fed. They have more money than anyone. The second battle is you don't fight the tape. And the tape is completely different than what the Fed is saying. This market wants to rally on every time the Fed stops talking. So we finished the conversations. Okay. Fed made it, by the way, clear they have nothing to do with the debt ceiling. They cannot fix that problem. That's going to have to come from the government side of everything. You had some ideas as to his workings on it, and the U.S. can't afford to not pay its bills, blah, blah, blah. And he wants it done sooner rather than later. He was also asked, you talk to other Fed members? Yeah. I don't know why anybody says they don't talk to Bernanke. Isn't he still around? It's Yellen, Binder they'll talk to. They'll talk to Greenspan. It seems strange to me, but whatever it is. Okay, so you learned a lot with that, but I'm going to come back to this. He finishes talking, the market drops, the stock indices. Okay, and they're looking, oh boy, this could be a problem. And they were all over the board all day. At about 2 o'clock Chicago time, the market, you can just see it, starts getting a bid, and it carries right into the end of the day higher, and you end up 200 and some odd points, 260 higher in the Dow, 200 in the NASDAQ. So it was a strong day in the face of the Fed chair saying that we are going higher on rates, basically saying they're going to be data dependent in so many words, and we're going to stay there into 2024. He said that. So the people that think that he's going to not do that, well, according to what he's saying, they're wrong, but according to what they believe, they don't believe him. And that's why you have the battle of don't fight the Fed and you don't fight the tape, and it makes it difficult at times. When you look at the S&P, you can see the crazy action today. Now, this is called distribution. You get up to a peak, you drop back, you come up. If you pop through it, it was just a pullback. But if you come up a little bit and you start down again, you're just now going into this type of waviness in the market. But at a very high level, do you think this market's going to go for new highs? I guess is the question if you're buying it up here. I have some problems up here in these markets. You've got the pattern of higher lows, higher highs, bullish. You're over the 18-day average, bullish. You had a bullish crossover where the 18-day average got over the 200 in gray, bullish. But you're stuck against the upper Bollinger Band. Bullish to a degree. Not one where I'm thinking, okay, I'm going to call my clientele and say, hey, let's buy here to get to the upper Bollinger Band. And if you go to the weekly charts, you have the same issue. So something of a resistance area. When we take a look at the market, let's back off here and see, did we ever lose the embedded reading? So both numbers being over 80, that's part of embedding. You did not have both over 80 here. Did you have 3 days before that, though, where you had it? 1, 2, 3. So you have an embedded reading that waffled. When it got to the 79 reading, came back up today, it's still embedded. That's the hardest thing to do. Now, in the futures, you lost the reading, and then you got it back today the same way. So it's the first sign, and you always look at it that way. It's a wobble in the market. It's waffling around, if you will. You don't want to see today's lows taken out. My instincts would be you take out today's low tomorrow or the day after. Before you know it, you'll be back wherever that 18-day average is, if not lower. That would be a bad number. You already know the workings of the slow stochastic are waffling on you. It won't withstand taking that low out, in my opinion. Now, you know, I've done a report on gasoline, a special report. Well, I had one of my clients write today, and he said, you know, Ira, which one of the different ETFs for gasoline is the popular one? It's UGA. It's based on the futures contract. So if you're going to track my special report, and we'll get to that, maybe we should bring it up right now, and then we'll finish up here. This report that I did is because we know that spring, summer's coming. You know, you're driving your car, you hear TubeBuddy, you hear from AAA, you hear from all these different services, all the gas prices, your neighborhood, 2 miles away, they're selling gas for this. Well, they bring it on because in the summer and spring, prices tend to rally. Well, is there a way to take advantage of that? Does it always happen? What are the seasonals? I cover it. I use the Moore Research Report to give you seasonals going back 30 years, 15 and 5 years. Then we're going to take a look at basis the futures, because this ETF uses that. What happened on the weekly charts? Then we're going to look at 2 daily charts, and we're going to build all these with the swing lines and everything else on them, the Bollinger Bands, everything there, looking for the opportunity. Okay, so if you want to see this, just move your cursor up to the top here. You'll see an icon, give it a click later, and boom, you'll go there. You can go to our website under the word research. It'll be there. This will come off our website. It only goes onto the website and stays there for 3.5 days. They're not history lessons. They're meant for what I just did. These charts aren't valid 3 weeks from now. The concept is there, and I'll update my subscribers on what I'm seeing. So that I do. Okay? So now let's go back to the chart action so that we can talk here. So the resistance is pretty clear. It's 61.05, 60.94, the 18-day average. If the market can clear 59.97, you break the downtrend. You had gotten oversold, and you're getting a bounce. And you've already hit the Bollinger Band, where those bearish most likely have covered. Apple keeps coming back up to the upper Bollinger Band, and it's embedded. Until it loses the embedded status, it's bullish. And today was a tech day. I mean, the techs ran it. Microsoft running crazy. You know, Microsoft today also released, I don't know if you know it, their new enhanced Bing product where they're using that, what is it, the newest language to try to figure out artificial intelligence. It's going to get very interesting out here. In AMC, so they come up with what I thought was a pretty good plan, and they're one of the few markets down today. They're down 62%. That's a 10% drop on a $6 stock, so it's nothing small. Did I expect it? Oh, yeah. Why? Why would I have expected it? What are the odds of staying over the upper Bollinger Band? 5% of the time. That's why I suspected it. I think their plan was good. I just think that technically speaking, and the technicals win always, in my opinion, that's what came about. Now, XLF, the financial services, I'm happy this rallied as much because my subscribers know why. All right, but now you're up at the spot where profit taking's got to be the key. I think I was using 37.01 this morning was the number. We hit a high of 37.11, so if you followed what I was saying in the morning, I'm very happy camper today. Got it? Now the question is, as long as it stays embedded, it's still buy on breaks, but if it takes out today's high, no. And again, you're going to probably lift a little bit the Bollinger Band from where it was this morning. In XLI, you are overbought, not embedded. Both these numbers aren't going sideways over 80 in an uptrend that peaked for the near term here. It's pulled back to the support line. Now, the 18-day average of closes, I call that red line the line in the sand. So often, if a market goes down, it will go there to try to figure out what next. If it goes to the Bollinger Band, often it'll pull back to that number to figure out what to do next. Both ways. Something I learned years ago from great traders, and it's stayed with me my whole life. So I look at that. Okay, but this pullback, was it a buy there? Well, the problem is you're overbought. So if you build filters and one of the filters says, hey, no, it's no. You're looking for the situation where all your work says go, not where one of them or two of them or three of them aren't in there. Don't override your work. In stocks, higher lows, higher highs. Now, if you and I come over here, we come back to yesterday's trade. You lost the embedded reading. Today you got it back. So I think traders got out yesterday. They're back in today. And if you get through yesterday's low, they probably dive out again. I wouldn't have gone back in, but the market is bullish again. No question about that until you lose the reading. In the home builders, you lost the bullish embedded reading today. Got a reading of 75. So before it hits the 18-day average, which I hope it hits, that's what my work says it often does, gives you some leeway to come out of the market. That's how I look at it. You've weakened. Now, if you re-embed the way you just saw stocks do, then you approach it different. But for me, no. When I get these signals, I don't hang around if I were in them. I teach traders, just get out. There's always another event. You don't have to be an XHB. There's another market to enter one way or the other. Now we get up over here, and we got up to 88.48, which took out the previous high. So we have found in the energy sector that the combination of the green line, which is the 100-day average, and the black did what it's supposed to do. In an oversold market, the pros came out and the market's had a heck of a bounce. It's not ready for a trend trade, in my opinion, but that's what it looks like it's doing. In gold, you got down to the lower Bollinger Band. You're not embedded. What do I teach? Learn why I teach it by taking the enhanced Bollinger Band course when you're on our website, and I think you'll have two hands going very strong with what you do. Now, silver's been a son of a gun market. You got to the upper band lower, and now you had a downside breakout. When that happens, it's very difficult to just run away from and get the bounce. Now, the other part of the argument is very important. You have 3 days in a row under the lower Bollinger Band. 5% of the time you stay under it. I count each successive close under it is taking away one of those 5 percentage points. So I've taken 3 out of the 5, so I have a 2% chance of staying under the Bollinger Band. Is that something I want to be in? I'm not buying it. In the copper market, you hit the Bollinger Band for the first time and you're oversold. So long, if one were short. I didn't even see how to get short the market. It's fallen. And we've talked about China and the problem that that's caused. TLT. You went right up to the 200-day average. See the gray line? The upper Bollinger Band. What do you do the first time you hit it and you're not embedded? So long, crew. And now you're down to the lower band. Hello. Out we go there too. Why not? Okay? No, I don't see anything to do. This is just whipsawing in sideways action, and I point that out to you all the time. You want to get killed? Trade sideways action. It's a great way to get frustrated. When we look at UUP, now you're trying to break back into the Bollinger Band. You're overbought. I think the pros got out of the market yesterday, not today, yesterday, the first real time you hit the market solidly. Okay, we'll see what happens. Is there a trend trade? There isn't. You have a lower low, higher high, and you have the flip-flop in the FXE. I don't see anything there. So it's one of those quieter periods. I've got quite a few. I think I've got 5 trades still on for my subscribers in my morning subscriber video in the different ETFs and the stocks. So if you're interested, that is the place to go, because I've had more aggressive trades there than in the futures, believe it or not. And the setups have been better recently. They flip-flop back and forth all the time. Again, if you want to see the gasoline report, click up here. When you're on the website, you want to learn more about my subscriber videos, go into the research area there as well, and I think you get a good package. I'm Ira Epstein. You have a good day. I'll see you tomorrow.